We're talking, one of the news stories we're following is Barack Obama, $1 trillion deficit spending as far as the eye can see. That was his proclamation today. And I want to ask you what this means to you as sharpshooter investors and investment strategists. Don Luskin, you first. $1 trillion as far as the eye can see. What does this mean to people in the market?
Well, there are deficits and there are deficits. If the deficit is in order to cut taxes, to liberate the private sector, I'm all for it. I never met a tax cut I didn't like. If the deficits are so that we can expand the power of government and they can create subsidies for uneconomical green technologies and buy a bunch of cement and pave over the prairies to put people to work digging holes and filling them up again, that's a huge mistake. I'm not afraid of debt. I am afraid of larger government.
How would you characterize the backbone of this one? Which category would it come under?
Well, they seem to want to have it both ways, which is a lot better than we were looking at 3 or 4 weeks ago when it was basically all spending. At least now they're starting to talk about tax cuts. They're not the kind of tax cuts I like. They're not particularly incentive-oriented. They have more of a subsidy flavor, more of a welfare through the tax code flavor. But at least it's putting money in people's hands where individual people can make the choice of how to spend and invest that money, not a politician.
Peter Schiff, I'm going to come back. Just real quick on the way out, Don. Can the stock market move through the $1 trillion deficit?
Oh, sure, it's doing it right now. Stocks are priced right now for a 10-year global Great Depression. That's not going to happen. The upside's unlimited.
All right. Don Luskin, is a recovery brewing? Is that one of the messages of this rally, where clearly the cyclical sectors are leading the way? The defensive sectors, for example, consumer staples and utilities, have only done about a third as well as the cyclical sectors.
Well, Peter, I think, Peter and I quite unusually here are finding convergence in our ideas. I think what we're seeing here at first is a value play. Stocks just simply got too cheap. Some of this stuff just got the stuffing cracked out of it, and those are recovering. But that is what you would call the mustard seed. That is the kind of activity that investors see happening in their own portfolios, or they get a little envy when they see it happening in other people's portfolios, and they start realizing, aha, things are stabilizing. It's okay now. It's time to take a little bit of risk again. And as soon as people are willing to take a little bit of risk again, that's what causes a recovery to happen. Because if there's really any single definition of recession that just always works, it's when everybody stops taking any risk at all. They won't put their money out there, they won't put their labor out there, they won't put their consumption dollars out there. They freeze up. They go internal. And when they start willing to come out, when value brings them back into the marketplace, that's when recovery starts.
Pretty soon, what they're going to discover is that the safest asset is actually the riskiest asset, and people are going to flee from cash. They're going to flee from dollars, and they're going to move into stuff, not because they want risk, but because they don't want risk, and they properly identify the risk.
On the dollar play, it looked like it was reversing, but now it's coming back, and it's the yen that's weakening, Peter. What does that tell you?
Well, look, the yen is still in a powerful uptrend, and the dollar is weakened somewhat against the euro. But look how strong the Aussie dollar has been over the last few days, and the Canadian dollar. So you're seeing the dollar in general weak. Look at that huge reversal today in gold. Gold was down 20 bucks this morning, and it finished up about $5. So they're buying the dips here. I think the dollar has topped out. It's probably going to keep falling. And, the bond market, I mean, we keep talking about the Madoff Ponzi scheme. Peter, our whole Treasury market is one giant Ponzi scheme.
Well, let's not forget here that the idea of a dollar weakening here is not necessarily a bad thing. It's not necessarily because people are terrified that the dollar is just going to become worthless toilet paper. It's because that incredible headlong demand for just simply holding paper money in your fists because that was the only thing that would last, that's evaporating. People are starting to feel confident again.